On January 17, 2024, just in one day, a US headquartered firm made a profit of 735 crore rupees in the Indian stock market. Between January 1, 2023 and March 31, 2025, the same firm made a stunning profit of 36,502 crore rupees across categories and segments of the National Stock Exchange. This figure is way more than the profit that many big Indian companies make in a financial year. And all of this allegedly by manipulating the Indian market. This is the story of Jane Street. Just this Monday, Sebi allowed the Jane Street Group to restart trading after the firm deposited 4,844 crore rupees in an escrow account to comply with its order. What was the Sebi's order? It had on July 3 banned the New York trading firm, accusing it of manipulating the Indian derivatives market. The derivatives market is where traders buy and sell instruments like futures and options, which derive their value from underlying assets such as stocks, bonds, or commodities. We'll discuss this and the booming Indian F&O segment in detail in just a bit. Jane Street was going about conducting its business after having entered the Indian market in December 2020. So, how did it come in the crosshairs of the Securities and Exchange Board of India? Interestingly, it all started in an American court. In April last year, Jane Street sued US hedge fund group Millennium Management and two of its ex-traders, saying that they had taken an immensely valuable and secret trading strategy with them to their next workplace. It later emerged at a court hearing that the strategy involved India options and had generated $1 billion in profits for Jane Street just in 2024. Now, Jane Street and Millennium Management, two of Wall Street's biggest names, settled the dispute soon enough, but the legal dust-up led to two important things. It bared the fast-growing interest of global firms in the Indian securities market, and it gave Sebi a whiff of what was actually up. Before we dive deep into the events between January 1, 2023 and March 31, 2025, let's take a look at what the Jane Street Group is and how it got its name. The Jane Street Group is a global proprietary trading firm that employs more than 3,000 people in offices across the US, Europe, and Asia and trades in 45 countries. In fact, one of its co-founders is an elusive American man who is known to have given Sam Bankman-Fried his first break and someone who is said to have once nearly funded a coup in South Sudan. And for those details, do stay with us. Jane Street says it was founded by a small group of traders and technologists in a tiny New York office. The firm is named after Manhattan's Jane Street, where this first office was opened in the year 2000. Unlike hedge funds, Jane Street trades using its own capital and is known for sophisticated algorithmic trading. At its core, algorithmic trading involves writing a computer code that then decides when to buy or sell securities such as stock, futures, or options. Sebi says that even as the US court case about the secret trading strategy opened and there were media reports on it, it began its analysis. This was in April 2024. 3 months later, the NSE was asked to examine the trading activity of Jane Street to check for any market abuse, and by August that year, Sebi first interacted with Jane Street. What was this secret trading strategy? What was the index in which Jane Street was dealing? What is the NSE's role in all of this? If Jane Street unduly gained from alleged market manipulation, who actually lost? And at the core of it all, what is F&O trading? In today's video, we will try to answer these questions and more. But before we do, I'd like to remind you that this video is part of a new series by ThePrint in which I'll often bring you explainers and analyses that study important issues of corporate governance and political economy. We would appreciate your feedback on it so we can keep improving this offering as we go along. So, after months of its analysis and investigation, Sebi released an interim report. What did it say? It said that Jane Street was manipulating the NSE's futures and options market using trades in the Bank Nifty index. It said that the firm placed very large orders to sway prices and benefit from the resulting movements. It alleged that this gave Jane Street an unfair edge in India's derivatives market. Jane Street has denied all of these allegations. Wherever I mention technical financial terms, I'll make sure that we make small digressions to explain what these mean and their context in this story. So, what do we mean when we say the futures and options segment? F&O contracts form a part of the derivatives trading market in India. The derivatives market is where people trade financial contracts whose value is based on underlying assets like stocks, indices, or commodities. Futures trading involves entering a contract to buy or sell something at a later date at a fixed price, no matter what happens. An options contract gives you the right, but it's not an obligation, to buy or sell something at a later date at a fixed price. If the trader decides not to make the transaction, they only lose the premium paid to the seller for the option. My colleague Mansi Fatke had done a deep investigation into the F&O segment last year, and I'll leave the link to her story in the description box. Her story, which was published around the time Sebi was conducting its analysis, detailed how this type of trading is fast turning into a gamified addiction for individuals, many of these in small town India. Many retail investors, which often include students, housewives, and early career professionals, are lured by the promise of quick profits but end up losing big. In some cases, even their entire savings or borrowed money. These concerns have prompted Sebi to suggest some steps to strengthen the derivatives framework, such as increasing the minimum contract size, rationalizing weekly options, and upfront collection of options premium. Sebi data shows that over 90% of individual traders in F&O lose money, and most don't even realize how dangerous it is until it's too late. A consultation report released by Sebi on July 30 last year said that in FY 2023-24, 92.5 lakh individuals and proprietary firms traded in the index derivatives segment of the NSE and lost 51,689 crore rupees. A 2023 Sebi report, which studied a sample size of traders taken from the top 10 brokers, said that the total number of individual traders jumped to 45.2 lakh in FY 2021-22, more than 6 times the number in FY 2018-19, which was 7.1 lakh. It's almost as if this form of trading has become a substitute for gambling in India, since the practice is banned here. We'll come to the NSE's role in such trading in just a bit, but for now, back to the Jane Street saga. The SEBI's interim report said that Jane Street's manipulation of the Bank Nifty index caused losses to millions of such retail investors. The Bank Nifty index comprises the 12 top Indian bank stocks. How did Jane Street carry out this alleged manipulation? Well, that's the secret strategy the Wall Street biggies appear to have fought about. It has to do with something commonly called the pump and dump strategy. Jane Street focused on Bank Nifty options, particularly on weekly expiry days. Expiry days are the final trading days when futures and options contracts settle. This means that their value is decided and they either become worthless or profitable. In India, stock options usually expire on Thursdays each week, and their price at 3:30 p.m. decides the outcome. Sebi found that on several expiry days, Jane Street bought huge quantities of options at a very specific strike price, meaning a fixed level like 47,400. For instance, on January 17, 2024, between 9:15 and 11:46 am, Jane Street bought a massive number of Bank Nifty 47,400 call options. They bought 1.09 crore contracts, and that's over 67% of all trades at this strike. This essentially means that they were loading up on a bet that Bank Nifty would end the day above 47,400. Until late afternoon that day, the index was below 47,400, and this meant that their calls were set to expire worthless. But something changed at 2:43 p.m. that very day. Between 2:43 and 3:25 p.m., Jane Street aggressively bought calls and other instruments, lifting the index just enough. At expiry, which was at 3:30 p.m., Bank Nifty closed at 47,408, making the 47,400 calls worth 8 rupees each. Jane Street exited most positions just before expiry, turning a potential loss into crores of rupees of profit. Sebi says that Jane Street started building this bet early in the day. Then, seeing that it could fail, it used its size and influence in the final hour to move the index just enough to make the bet win. Sebi calls this marking the close. Sebi says there are two scenarios that Jane Street appears to have deployed. But before that, I need to quickly explain to you what the two types of options are: calls and puts. Call options are bets that a stock or index will go up. You make money if the price rises above a certain level. Put options, on the other hand, are bets that the prices will go down. You make money if the price falls below a certain level. They are both ways to profit from the market moves without owning the actual stock. Now, let's discuss the first scenario. If Jane Street held put options, which rise when the market falls and then sold in the futures markets in high volume, pushing the index down, the puts become more valuable. Even if they lost money while selling stocks in high volumes, they gained much more from their puts. The second scenario is what happened on January 17, something we have discussed already. Even if they lost money buying high-end futures in cash to push the index up, the profit they made on their call options was much larger. So, what is the core problem Sebi is flagging here? Sebi is saying that Jane Street is such a large player that with huge trading volumes, they can sway the index how they want to benefit their trading strategy, almost like they're making their own luck. It says that Jane Street used two strategies: intraday index manipulation and extended marking the close. Marking the close means placing large timed trades near market closing to deliberately influence the final price at which options settle. And intraday index manipulation is when a trader repeatedly pushes the index up or down during the day, not just at the close, using large trades to influence prices and benefit their positions in futures or options. Sebi says that its detailed analysis of the trades on January 17, when Jane Street made a profit of 735 crore rupees, revealed that the intraday index manipulation was used on this day and on 15 out of 18 days covered in its order. The extended marking the close strategy was observed on the other 3 days included in the investigation. The latter strategy was also seen to have been deployed on 3 more days after the examination period in the Nifty Index options during May 2025. Now that we have a sense of what Jane Street was seemingly doing and allegedly manipulating at the NSE, let's also look at the involvement of the exchange itself in the larger scheme of things. The NSE's MD and CEO Ashish Kumar Chauhan has often cautioned investors against high-risk derivatives trading, saying that F&O markets should be left to informed investors who can manage risks. However, he is also bullish on the rise of the derivatives market, which is delivering enormous profits for the NSE. The NSE has a 96% market share in equity derivatives and 86% in the currency derivatives segment. In the quarter ending March 2024, the NSE's revenue from transaction charges surged 23% year on year to 3,719 crore rupees. Of this, 88% came from equity derivatives. In fact, the index options trading in India is such that sometimes it goes up to about 10 times that of the volume in the US. There's another very important aspect of the NSE. It is getting huge attention right now because its long-awaited IPO is expected soon. According to some reports, unlisted shares have surged 115% over the past year, with market cap valuations hitting 5.86 lakh crore rupees. Unlisted shares are equity in companies that are not listed on a stock exchange, so they trade privately between investors. One can buy them through off-market deals using brokers or specialized platforms. You must have heard of Unlisted Zone and PMS Bazaar. While this has a lot of interest because people hope to make good money as the shares get listed, it also has a benefit for the NSE. If unlisted shares are already trading at high prices, it signals investor confidence, and when the NSE does go public, it can raise more capital and justify a higher valuation. Many individuals are also getting into the unlisted market because, well, FOMO. They don't want to miss out on a completely legitimate and highly optimistic way of making money. And now we'll talk about something enigmatic that I promised right at the beginning of the video. An elusive American man who co-founded Jane Street and has a fascinating story. Meet Rob Granieri, one of the 4 co-founders of the Jane Street Group. The secrecy that shrouds this 53-year-old is such that there are barely any photos of him available publicly. Remember Sam Bankman-Fried, the 24-year-old crypto mogul whose massive empire collapsed recently and who was sentenced to 25 years in prison for stealing $8 billion from customers? Granieri is widely known as the former employee of Sam Bankman-Fried before he left to build his crypto empire. But that's not all. It only gets more interesting. Legal proceedings in a US court revealed that Granieri allegedly ended up funding AK-47s, Stinger missiles, and grenades to topple South Sudan's government. He conceded he put the money, but said that he was duped into funding the alleged coup plot. Basically, he funded it accidentally. His lawyer said that Granieri was a long-time supporter of human rights causes and that people who reached out to him lied about their intentions on what to do with the money. According to a Bloomberg report, the amount was $7 million. Interesting, right? It gets even more interesting with the entry of a name that is known across the world, especially in India, Garry Kasparov. The chess champion and Russian dissident who was the chair of the Human Rights Foundation connected Granieri with a man accused of illegally exporting arms to their home country, South Sudan. Kasparov later released a statement saying his record and his values were clear and they remained unchanged. He said he had spent much of his life standing up for civil rights. Once you're done processing what I just told you, let's move on to what is likely to happen next in the Jane Street matter. Sebi said on Monday that it had lifted trading restrictions on Jane Street after the US firm deposited 4,844 crore rupees, which is unprecedented. But at the same time, Sebi said that it had directed the NSE and BSE to closely monitor the activity of the US firm. Sebi said that the firm had given an undertaking that it will not trade in options. It said that it also did not intend to trade in cash until it had explained its trades to Sebi.